if we can avoid some level of risk, or if we can control a loss, retain some risk, control it, and then transfer, if we can do some of each of these things, then that hopefully can increase your peace of mind overall.
With many people making decisions about health care coverage for 2021 and conducting year-end reviews of existing insurance policies for their homes and automobiles, this is a good time to think about ways to manage financial risk. On today's Sound Living, 4 risk management strategies. Sound Living is a weekly public affairs program produced by Research and Extension at Kansas State University. I'm Jeff Wichman. K-State Research and Extension Resource Management Specialist Elizabeth Kish says there are actions we can take on a daily basis that would help us manage financial risk. Elizabeth, there's been a lot of focus on health care this year because of COVID-19, but there's also a need to think about our financial health as well. And we're going to cover some of the things that people might want to take into account because, in a sense, we're also talking about risk management.
That's right. So when we think about our health, often we think about health care, access to health care, being able to pay the deductibles, the co-payments, being able to pay whatever the patient or the consumer part of any medication is or any ongoing treatment. And that's certainly really important, and our finances do impact that. Another way to look at it, or to sort of broaden our view of health, though, is what are the actions that we take on a daily basis sometimes that would help us to manage the risk of needing to use health care.
So in that sense, then, we're looking at lifestyle, for instance?
Yeah, some of the primary determinants or the aspects that impact our health status really are lifestyle, our environment, and of course genetics does play a part. But when we think about lifestyle elements, those are really the things that in many cases we make individual decisions about.
So choices in terms of how we live our life, we're not talking necessarily the financial aspect at this point. We're talking more about healthy lifestyles?
Well, yes, but I mean, I guess, and this is my bias because I deal with money, but I think the finances sort of weave their way into it throughout. So if we think about, often we think about, okay, if I'm sick, do I have health insurance or don't have health insurance? But insurance is really only one way of managing risk, right? And so if we think about health, but that could be illness, it could be a chronic condition, but it could also be another way to think about managing risk is thinking about preparing for disasters or wearing our seatbelt, right? That is a way to manage risk. And so there's a lot of different things you can do to avoid risk is if you choose not to own items or expose yourself to activities that could cause a financial loss, either strictly monetarily or because they somehow affect your health, and then they might cause you to have a financial loss. And maybe the loss is you're unable to go to work because you're sick. Cold and flu season is coming upon us, and flu shot is one way to manage risk. Another way is, again, wash our hands, stay home if you're sick. Don't expose yourself to other sick people.
Well, and really the type of insurance that we decide to take out for health coverage does come into play because there are different types of policies in terms of how comfortable you are with accepting risk. You may want a higher deductible. Some people may want a very low deductible.
That's right. And so when we think about our health insurance, and this is a good time to do that because a lot of us have either just finished up with open enrollment periods or are still in an open enrollment period and are asked or expected to review our health insurance coverage along with our dental and vision coverage and to decide what sort of coverage makes the most sense for our family and our current health situations. And or, for example, we often, if someone's expecting to have a child in the next year during their open enrollment period, that's a time to start thinking about that too, is if you're adding new dependents to your family.
So what should people take into account then in terms of trying to make sure that they're not overinsured or underinsured, and then balancing that, I guess, with how much they want to pay or are willing to pay?
Right. So when we think about risk management strategies, there's 4 things you can do. You can avoid the risk, although sometimes we can't completely avoid a risk. But one example when we think about avoiding risk is having a swimming pool and not putting a fence around it, not taking the precautions to prevent drowning or something like that, right? So if you don't have a swimming pool, that's a risk you're avoiding. If you do have a swimming pool, then there are other ways that you need to manage the risk. You can also retain the risk somewhat, which means you're going to accept that if a financial loss occurs, you will have to cover the cost yourself. And that means you have some money in your emergency fund to cover some risk. For example, if you don't have collision insurance on your car because it's an older vehicle, that means that if you're in an accident and it's your fault and your car is damaged, you'll have to pay to fix your car. So financial losses that are a result, for example, of someone using your credit card, or another example of retaining the risk because your liability is limited to $50 per card if you report the card as lost or stolen. So you're retaining the risk. You can't completely eliminate it, but you've decided, okay, I'm going to use a credit card, and I know there's some risk involved, but if something happens and someone else uses my card, as long as I keep on top of my statements and I notice these things and I report it right away to my credit card company, my loss is limited to $50. So those are 2 examples of retaining risk. A third way is to control the loss or reduce the risk. And when you do that, that means you take steps to reduce the frequency or size of a financial loss to what you would consider to be affordable levels. And again, all of these things depend on individual and family financial situations. So this is kind of what you were talking about in terms of possibly insurance. But for example, to control the loss of theft in your home or your automobile, we typically lock our doors so that we don't just leave it wide open. Anyone can come in and help themselves to whatever. So that's one way to control a loss or reduce a risk. This is where seatbelts come in. You can reduce the loss of serious injury or death by wearing a seatbelt and making sure the other safety devices in your car are working properly. If you have large dogs, managing them appropriately so that if someone comes into your house or onto your property, visitors, that they do not have a negative experience with your dog. We have smoke detectors. We have carbon monoxide detectors. So those are ways to protect ourselves, to control a loss. And then finally, the last way, and this is often what we think of as the first way to protect ourselves, is to transfer the risk. And that means you pay someone else to cover your financial loss if you encounter the risk. And typically that is done through insurance. And so for a fee, which is what the premium is, the insurance company agrees to cover a financial loss, whatever it is. We have homeowners insurance, car insurance, we have health insurance. There are other types of insurance policies that we can purchase that would then transfer the risk. Although we are paying the premium, so we're paying someone else to take over this risk, and that's what the premium covers.
This, it sounds like, comes down to a real individualized choice because you have to be comfortable with whatever risk level you go at. I'm wondering how this comes into play if you are married and maybe one person is a little bit more risky than the other. Do you look at separate policies in some cases? Do you talk this out and decide this is what's best for us financially? How do you go about, I guess, maybe even having that conversation?
Yeah, that's an interesting question because, for example, in auto insurance, I believe that's typically by household. And if there are two adult drivers, then they might both be on the policies, but usually you can specify, okay, this person is the primary driver for this vehicle, and so they are like the first named person on that policy, but then the other person might have a vehicle that they're the primary driver on. So sometimes you can't separate it out. For example, homeowners insurance, it's one policy that covers the house. So if someone is more risk averse and would prefer to have perhaps a lower deductible and a higher level of coverage versus another person who is more comfortable with less total coverage and also a higher deductible, which means that if something happens, you would have to come up with more money on your own before the insurance would pay out. Those are conversations, I think, that within household conversations that need to be had. Often, if when you have a mortgage, there's a minimum level of insurance that the mortgage holder is expecting you to carry on your house. So some of these things are set, or if you have a car loan, the lender will have some say in that as well. So it's not just about individual choice. Health insurance nowadays, especially if you get it through your employer, there are, the policies are predetermined, how much the premium is, how much the deductible is, what the copays are, what the total out-of-pocket will be. So you have some choice based on the total package of an option. And so then you would just have to, among all of your options, decide which one fits your current situation best.
As a resource management specialist, what's your advice in terms of really assessing not only where you stand financially, but what you can afford to take on as part of this risk? Because I'm assuming that's what really comes into play here, is not only how risky are you, but realistically, how much could you afford to lose?
That's right. So when it comes to health insurance and thinking about deductibles, copays, total out-of-pocket costs for the year, and it may change from year to year because ideally we would all have the money in the bank that would cover, if we needed it, our total out-of-pocket costs for a year. As those totals get higher year by year, that may not be realistic for many people. So that's a consideration. In terms of carrying adequate insurance on your home or a vehicle, well, let's first focus on the house. I think we've heard of people who, they finally pay off their mortgage. They decide, we can, maybe cut back on our level of homeowners insurance because the lender's not requiring us to carry a certain level. And then something all of these things tend to be unexpected, right? We don't really plan ahead for lightning to strike our house or a fire or whatever. And then something happens and they don't have the insurance coverage that they had, and they may not have the money in the bank. I think, if you have a very healthy emergency fund, that might influence some of your choices. But I think we all need to remember that how long did it take you to get that healthy emergency fund? And it could be wiped out in one emergency. Yes, you have it for that emergency, and then you start again basically from scratch, right? So, yeah, nobody wants to contemplate these things, and I'm actually getting kind of bummed out just thinking about it, talking to you. But I think we have to sometimes face these hard questions, these hard decisions, and my philosophy is the more money that you have set aside for emergency in cash is always better than nothing, right? So if you have $500, that's great. That means if your washing machine goes out or if you need some repair for your car, probably you can handle that with your emergency fund and you don't have to use credit or you don't have to borrow from friends and family. As you're able to, the more you can set aside, the better off you'll be to have that cushion.
And if I think I hear you right, really what you're saying is, what is your peace of mind? What's going to allow you to sleep well at night?
That's right. And really that is often what we think of insurance is buying us peace of mind. But these other risk management strategies can also help us. So if we can avoid some level of risk, or if we can retain some risk, control it, and then transfer, if we can do some of each of these things, then that hopefully can increase your peace of mind overall.
That's K-State Research and Extension Family Resource Management Specialist Elizabeth Kish on managing financial risk. If you're currently making health coverage decisions, Extension has 2 publications you might want to check out: Health Insurance Smarts, Ways to Get Health Insurance, and Health Insurance Smarts, Health Savings Accounts. The publications are available through the online KSRE bookstore and at county and district extension offices. Sound Living is a weekly public affairs program produced by Research and Extension at Kansas State University. I'm Jeff Wichman, and this is the K-State Radio Network.